The clock is ticking on a tax break that saves struggling homeowners from paying thousands of dollars to the IRS. If the Mortgage Forgiveness Debt Relief Act of 2007 does not get extended by Congress by the end of the year, homeowners will have to start paying income taxes on the portion of their mortgage that is forgiven in a foreclosure, a short sale, or principal reduction. In all, more than 50,000 owners go through foreclosure each month. That means if the tax break is allowed to expire, upwards of 600,000 homeowners a year may be affected. Joining us now with more on the tax issues is expert Steve Albert with Glass Jacobson. Good morning and thanks for coming in.
Thank you, Lisa.
We keep talking about this fiscal cliff and how it's going to affect us, but I think that most Americans really have no idea of what they're talking about. How does this election, let's break it down for taxpayers in terms of how this election may affect them. Individual taxpayers first.
Okay, when we talk about the fiscal cliff, we're talking if Congress does nothing, then the budget takes place and there's a cut in the budget for primarily the defense. 50% of the cut will be in the defense area. But the other thing is taxes go up for all taxpayers. And that will be a significant change for people, whether it's individual, small business taxpayers are paying a similar tax on it. There's going to be some tax credits that would go by the wayside. Also, that these things help to incentivize people to invest and do things in certain areas. Okay,
so what are some of the other changes that are coming in 2013 that we need to be aware of?
The most significant thing that will hit the most taxpayers are the wages. Congress enacted a Social Security tax reduction of 2%. As of January 1st, everybody's wage is effectively going to be cut by 2% because it's going to be reinstated to the higher Social Security tax. That's the biggest thing. The other things is all tax brackets are going to increase if there's no change by Congress. Investment income, because of Obamacare, will tax interest, dividends, capital gains, and rental income at an extra 3.8% for all individuals earning over $200,000 and married couples earning over $250,000. The last one is what I call the terrible triple tax, and that's when capital gains and dividends. Right now they enjoy a 15% tax rate. That could go as high as 43%. One, because there won't be the preferential rate of 15%, it'll be the regular rate. Two, the regular rate will be increasing. And three, this extra 3.8% investment tax.
Okay, but so in the meantime, what can we do to prepare ourselves?
At Glass Jacobson, what we're doing is we are getting ourselves in position for a change in the law. We believe it'll happen by December 31st. What we're doing is we're projecting people's income for 2012. We're running a projection for 2013, and we're having them be liquid with funds so that if a change happens or doesn't happen, they're mobilized to make changes. Then we wait for the tax law. We look at that and we say, what's the best way to minimize our clients' taxes?
All right. Thank you so much for coming in.
Thank you.
And we'll get the chance to talk to Congressman Cummings about what he expects to happen in Washington in the coming weeks and early next year. Thank you so much.
Thank you.